The almighty dollar is mightier than ever. The greenback is on a meteoric rise, hitting a 20-year high last Thursday. Look at this. Against the euro, it is exactly at parity. Last week, it was at 98 cents. It took only 98 cents to buy a euro. So real power here. Now, the Federal Reserve's rate hike warpath has helped strengthen the dollar, but it's also in turn taken a toll on gold, the yellow metal, down more than 17% from its mid-March highs. Right now, we do have gold up about just under 1%, but at $1,727 a troy ounce. Now, what we want to do is show you, take a look at gold alongside the dollar for this comp chart. You can see that around April, the cosmic crash began and the dollar just continued to power higher while gold has done the reverse. The commodity and the currency have conversely tracked each other. So what do continued rate hikes and a strengthening dollar mean, not just for the price of gold, but for the gold mining industry? Let's bring in GoldMining Inc CEO Alastair Still in a Fox Business exclusive. Alastair, we're aware, obviously, that when a dollar is stronger, very often that weakens gold. But how does a company like yours deal with that and sort of absorb the shockwaves from something like that?
Well, it's a great question and one that we often get. And I would point out that while the dollar remains high and the gold price has been relatively stable over the last year or two, what we are seeing in foreign currencies is record prices of the metal in the countries where gold is often mined. But the other impact that we're seeing with the dollar here, of course, relates to interest rates. And we're in a period now where we have negative real interest rates. And historically, that's been a very positive period for gold. So we see this as a perhaps maybe a little period in the cycle where there's some upside yet to come. Historically, when real rates have been negative, gold price has taken off, and we think we could be poised for a similar reaction this time around as well.
Similar reaction. Okay, that we'll wait to see bear out. But we'll talk about the Federal Reserve. We do know that Jay Powell is speaking tomorrow. And then, of course, we are in just under 1 week going to get inflation numbers for August, the August Consumer Price Index. That is going to be extraordinarily important ahead of the Federal Reserve meeting in just a couple of weeks. How does inflation this time around, because it's almost as if people have thrown out the history books or the almanacs, how is inflation affecting gold at the moment?
Well, I guess inflation impacts gold on a couple of fronts. One, it does impact the true metal value, but the other impact is on the producers themselves, who are very aware of how inflation impacts their bottom line and on their costs. What we have seen through time is that the gold miners have been very efficient trying to weather storms, whether it's a decrease in the price of metal or in times of inflation. And historically, what we have seen from the majors and other producers, when times get tougher, the price of metal goes down or inflation is high, they tend to cut back on the long-term spending. They cut back on exploration. So the net impact of that has been a gap in the pipeline for many companies. And that makes it harder to replace what they're mining today. And hence companies such as mine, GoldMining Inc., properties in our portfolio will become that much more attractive to the majors who have perhaps had a gap in their exploration spending to try and stave off some of the inflation impacts for today.
Well, gold mining companies have suddenly been very attractive to certain unrelated companies. I mean, you have Adam Aaron over at AMC buying Highcroft Mining. When you saw that, you've got a movie theater chain buying a gold miner similar to yourself, well, in different ways. But what went through your mind at that point?
Well, I guess, a couple of thoughts went through my mind. The first off is that clearly someone in that team led him to believe that there was some fundamental value that could be had by making that investment. And we believe that's the case for many gold mining stocks such as ours. And that fundamental value gap, I think, is really going to come as generalists start to come back to our space. Remember, the gold price is still $1,700 and it's been up around $1,800, but that's not a huge shift. That's still a pretty good price. The generalists seem to have been out of favor. When they come back in, and the AMC example is just one perfect example, is when the generalists come back in, they're going to come back in strong, and it could be a real sort of meteoric rise in the price when that does happen.
All right, we'll wait and watch. Thank you, Alastair.
Pleasure.
Good to have you.